Welcome to the Options Income Blueprint Weekly Income Report. This is Michael Schulman on November 21st, 2022. Reminder, we have no trading tomorrow. It's a very light trading week because of the Thanksgiving holiday. Not a time to put on a new position. We rolled everything that we wanted to roll past this Friday to next Friday for that reason. So I'll see you next Tuesday, not tomorrow. I want to go over the trades and results from last week, as we always do. And it was interesting because took a loss on a stock on Block, which used to be called Square. And what I want to do is I want to talk about the history of Square a little bit now. We're going to do more next week. And the bottom line is why. Why did we wait till Friday? And why did we take a loss? I got a bunch of emails about this, and it's understandable. So it was important that we discuss it a little bit more at length. But sometimes taking a loss, we take very few of them, is a much better thing to do. And that's why waiting for Friday was necessary. So last week we did have a cash-rich week. We closed 3 trades, including that loss. But not only did results from the other 2 trades, which were Starbucks and the trade desk, mitigate against that loss, this really mitigated against the loss, which is these were our rolls. These were pushing positions out. And this is what we do. Every week I get a hello, thank you, I don't understand from people who are new to the service and new to the update. And please understand, it's not speculative. Cash and income. Remember, cash and income. Third time, cash and income. And we focus on cash and generating cash that can be used as income or reinvested with the theory that's the best way to long-term and short-term. Long-term thinking, short-term trading. But it's also the way to outrun a bull. And that's what we're going to be doing for the foreseeable future. And here's the net. The cash return on capital is measured in one contract was 42% a year. And our goal is 26 or 0.5% a week. And that 42% a year would outrun, and the 26% would outrun any bull. Or break us even with a bull while your next door neighbors are down 25 or 26%. So it's important that you understand part of getting there is not tying up your capital too much if you have deep concerns about where the stock might trade, and that's why we close Square at a loss. And just to simplify things, the new trades, we had a very low rate of return because we balanced out between the winner and the loser. The roll trades, we made a lot of money. And 4 of those are core positions, General Motors, etc. And those are going to be, there are 4 of them, and they just continue to throw off cash. And one day we'll hit break even, we'll take a breath, we'll get a cup of coffee, and we'll go back into the trades with a clean set of metrics. But they're just engines of throwing cash off. So what was going on in the market last week, in addition to getting ready for this week, that prompted waiting till Friday for the 2 alerts and being willing to take a loss on a stock that was the 41st trade on Square since April of 2018. So let's go back to interest rate jitters. The jitters are coming up. December 14th is the next Fed meeting. Will it be 3/4 of a point again? Will it be 1/2 a point? Will the language be more hawkish? Will the language be more dovish? And when interest rate jitters hit, they hit bonds, and then bonds go into equities. You also have slowly drying up liquidity because the Fed is rolling bonds off its balance sheet. It's not replacing them with purchases and so forth. It's a gigantic market. It can be $600 billion market on a given day where bonds change hands. So even small changes can make a difference and spill over into equities. The other thing in the real world, which is the thing that's most important for us, is selected retail. And I did my pre-Thanksgiving weekend kicking on doors. I don't do it Black Friday, that's insane. But I do it the weekend after the weekend of Thanksgiving, the weekend after is where people are spending their money. This was the weekend of the pre-Black Friday big box sales. 2 weeks ago, if you're going to a Target or a Costco, normal traffic. This weekend it was nuts. And means people are bargain shopping, and the new frugal is here. What is the new frugal? It was actually a piece on CNBC, or it might have been the New York Times this morning. Maybe it was the Times. And it was simple. Quoting a woman, she grew up with 20 gifts under the Christmas tree, a couple in South Carolina with 3 kids. That's the way I grew up. All my stuff, all my school clothes, all my everything was always under the tree. And she said, not this year. She asked the kids what one thing they want because they're cutting back because of inflation and concerns that her job, her contract may end in the spring. Perfect crystallization of what I call the new frugal, which is she's going to be reducing the money she spends, but it's going to be on something of quality. Now, for people who are not concerned about their job, this does not, the new frugal also translate, I'm going to spend the same amount of money, but it's going to be on something really good. Well, what does that mean in the real world? Well, we don't necessarily trade them, but it means you're not going to buy your china at Bed Bath & Beyond. You're going to go to Williams-Sonoma or your pots or whatever. And so it's something that will allow us to pick winners and losers and keep in mind the names Yeti and Canada Goose as we go forward into Christmas. Now, waiting for a Friday close. This is self-explanatory. We do the real world, but we also do the market. And you have to juxtapose one against the other to come up with your tactical management. And so it's not just the trading ranges and the way the stocks were behaving last week. We're going into a light week. So if we're going to roll out 2 weeks, which I really didn't want to do with the number of open positions we had. And I'm not going to walk through the trades completely, but this is block, and you can see what the original trade was. The hope for was a very high annualized rate return, but it was also very well out of the money. If you can see here, the stock was at 73. We were trading the 67 put, about 8%, 8.5% out of the money. And we did this. There's also a 90-day chart involved here, but to keep things short and to the point, I was looking around over here. It's where we made the trade, but over here is where you're looking at a lot of trading activity where money came in, right around here. And I determined $67 price point is a place we got to take a stand. I mean, that would be the place to sell put. Even shorter term, when we closed the trade, we were up here when we opened it, and then we're down here, and then you're afraid of a breakthrough. Meaning Square could go to anywhere between 58 and 62 if the market sold off, or if there was a headline about the company. It's a very volatile stock, has a very high valuation. It's a really, Block is a really, really good company. So I don't mind putting on something that would seem a little bit more speculative. It's not speculative. It's a really terrific company. So that was the setup for this. Now, the next was StarBucks, which is the opposite. It's very stable. It outgrows in the recession. It outgrows when the economy is doing well. What I mean outgrows its competitor, really essentially is a fast food company. So here we have rates of return and the stock price difference with the put we sold is not that big a deal. And then you go to the charts and you can see things were slowing down. There was more negative trading, meaning the next trade is a lower price. Money wasn't coming in. We were over here. Same here. So we waited till Friday, and this is the point over here. Didn't close on Wednesday, didn't close on Thursday. Had a strong belief that we were going to hold. So let's take a small profit while we can. And that's what we did. We took a small profit. It's a 21% annualized return and a 0.2% absolute return. Not as high as you would like it to be with the minimum when you're thinking about putting a new trade on of a 26% annualized return, but a prudent thing to do. Now, the close on Square Block was different. I'll get over it. You'll see why in a moment. And I want to read this. I don't like reading charts. I'm going to read this. A modest loss was preferable. I'm going to add an adverb. A modest loss was clearly preferable to rolling out for 2 weeks with a very volatile stock. That stock could have been 55 or 58 in 2 weeks if bad numbers had come in over Thanksgiving shopping. And the first loss in Square after 40 winning trades in a row. What does that mean? Am I bragging? Yeah, a little bit. But more importantly, it means I have the self-confidence, and you should too. And this is a teaching moment for when you're trading a stock on your own over and over again, over and over again, over and over again. That when you know a stock and you see it and you're following the charts and you understand it, there are times you're saying, whoop, don't want my capital tied up. Whoop, it could go south for a couple of weeks. Don't want that to happen. So you pull the trigger and you take a small loss, especially when juxtaposed about all the other cash that was coming in during the week. But take a look at these numbers. Now, this is going to be, I'm going to elaborate on this in detail next Monday's update. Because we're not going to have a lot of trading to talk about next Monday. And I want to go over next Monday the tactics and the thought process that go along with what do you do when you want to do something long term that you believe in long term, but you also want cash coming in every week or every month. And look at these numbers. This is a big deal. That beats the market and it beats the historical performance of the stock, as you'll see next week. And so this knowledge and understanding and track record, it's the reason I always argue we should trade the familiar and sometimes take a lower rate of return when you're trading the familiar because it gives you more expertise in how to trade and manage the position. So this is the 90-day chart. And you could see down here, this was 52. You could see over here, we're about 62. So you could see over a 90-day period. And it was something that was concerning and it was time to go. So I used this chart last to describe, many of you are looking at moving averages and moving average envelopes and longer term charts. I look at them too. It's just a matter of when you use them and for what purpose. So trading this week, very light. And the real issue in the real world is what are Black Friday and Cyber Monday going to look like and what's it going to do to the retail sector and whether Twitter. And whether Twitter is important, even though it's privately held now, insofar as it drives some of the psychology of the market. And right now, it's an accelerating train wreck. And some people think, and I know many of you trade Tesla, and they're going, well, he's a genius with Tesla, and he was a genius with SpaceX. Neither is true. Both of those companies have succeeded in the real world. They're marginally successful. Well, one of them is marginally successful financially because of anomalies in government regulation that changed. And so the erstwhile business genius who goes over to a completely different company, a social media company, is flailing. And I only bring this up, we don't trade it. We traded in the past when it was publicly held. It will have an impact on other social media companies and the media/tech sector in the coming weeks. Just a heads up for those of you. And it will have an impact on Tesla if his business reputation continues to decline. So it's a slow week for us going to Thanksgiving. We're going to return to that normal pace. We trade live again next Tuesday. And please keep an eye, alongside my eye, on retail sales data and Twitter and see if I'm right or wrong about Twitter. Bad headlines, good headlines, impacting cousins like Snap and Google and so forth and so on. This is Michael Schulman. Have a great Thanksgiving.